In the last 4 months, RBI has increased interest rates starting with a 0.4% increase in May 2022 and followed up with 2 increases of 0.5% each. That is an increase of 1.4% in a span of 4 months. When you look at your EMI, do you still find that your EMI has not increased? And are you happy about it? What if I tell you should be worried about the fact that your EMI has not gone up? Let me help you understand why. Hi, my name is Harshvardhan Davar and I am the founder director of Wealth Café. Through the YouTube channel, we share with you ideas which can help you make smart investing decisions. And today I'm here to talk to you about what happens when the interest rates go up and how does it impact your EMI. To understand this better, you should first know that most of the home loans that are there in the market which are offered by banks and NBFCs are what are known as floating rate home loans. Floating rate meaning whenever the interest rates go up, that is whenever RBI decides they need to be increased or reduced, your home loan rate also will move in tandem, or it will go up or come down based on how RBI is moving the rates, which is technically tracked by using tracking the repo rates. So if the repo rate has gone up by 1.4%, that should translate into an increase in your home loan also to that extent, because most of the loans are what are known as floating rate loans. And the reason it is given out as a floating rate is it's easier for a bank to manage such loans, especially when they are of such long tenures of 20-25 and today even up to 30 years of home loans that are given out. So once you understand that they are floating rate loans, it is obvious that if RBI has increased the rates by 1.4% in the last 4 months, that will translate into a higher interest being charged to your loan account and eventually a higher EMI to be paid so that you can repay the loan over the tenure of the loan. So generally what happens is when RBI increases the rates, the banks do not increase the rates on the home loans immediately. They have a certain schedule which can vary from bank to bank. So it is not uncommon to see that a month, a couple of months, or maybe even longer can pass before the higher interest rates are passed on to you as a end user or as a person who's taken the loan. Now what is interesting is at times you will see that your interest rate has increased but your EMI has not increased. Isn't it funny? Isn't it something which should ring bells to you? To help you understand this better, let me take an example. If you've taken a home loan of 1 crore, which you have planned to repay over a period of 25 years, when you took the home loan, the interest rate on those home loans was 7%. Over a 25-year period, you will have to repay this loan with an EMI of 70,678 rupees. So with that EMI, you'll be able to repay this loan. And when the interest rates go up, it is but natural that you will see an increase in the EMI because the interest rate being charged is higher. So you will have to pay the bank a higher amount so that you can repay this loan. So for the purpose of ease, let's assume that the interest rate has gone up from 7 to 8% by 1%. So your home loan today is now going to charge you an 8% rate on your home loan. The EMI that gets calculated, which is needed to help you repay that home loan, is going to be an amount of 77,182. So you can see that when the interest rates went up from 7% to 8%, your EMI has gone up from 70,000 odd amount to 77,000 odd amount, which is a 10% increase in your EMI for a 1% increase in your interest rate. So when interest rates go up, especially, they have a larger impact on loans which are for a longer period because you're going to take much longer to repay the loan. So if this is the case that you need a higher amount to be repaid because the interest rates have gone up, you should be worried if your banker has not increased your EMI. Now you may ask, how is that possible? That the interest rates have gone up, I'm being charged a higher amount, but why has my EMI not gone up? Well, what you may not be seeing is that if the banker has not increased your EMI, in the back end, they have increased the tenure for which you will be paying this EMI. So although you signed up to repay this loan over a 25-year period, But because today the interest rates have gone up, you have to pay the bank either a higher amount, which we saw the EMI going up from 70 to 77,000, or if you choose the option which is the easier option for the banker to not increase the EMI so that your cash flows don't get affected and you don't get worried because of the increase in interest rates, what the bank has done is the EMI remains the same, but as a result, you will have to pay the banker for a longer period and the tenure of your loan goes up, right? While this seems okay because it's not affecting your cash flows immediately, if you are a prudent financial person, if you are somebody who wants to take care of your money, you will go back and do the working and you will be surprised at what you see. If you were to continue with your existing EMI of 70,000 odd amount, which we calculated at a rate of 7%, but because interest rates have gone up to 8%, you will have to pay the bank for a longer period. How long, right? Well, if you do the number crunching, you will find that when the original loan was for 25 years or 300 months, if you decide to let the banker charge you the same EMI and you're happy to increase the tenure, you will now have to pay the bank not for 300 but for 430 months. By choosing not to do anything about the amount of EMI, you've increased the tenure of your loan from 25 years to 36 years. That is for just a single 1% increase in your home loan. And we've seen practically RBI raise it by 1.4% in a small span of 4 months. And what does this translate into your interest outflow? In the original scenario, you would be paying your bank and a total interest of 1.1 CR over the 25-year period. But now, because your interest rates have gone up and you chose not to increase your EMI, you chose to increase the tenure of your loan, the total interest outflow over this 430-month period is going to be almost 2 crores. That is a 85% increase in your interest outflow only because you chose to keep your EMI same when the interest rates went up. Well, for most banks, that is the easiest option and that is the default option, and you will find that in many cases or more often than not, the EMI does not go up, the EMI is remaining the same, but the interest being charged to your account is going up. And as a result of this, what is happening is the tenure of your loan is going up, and if you decide to do nothing about it and let the tenure increase, the interest outflow or the interest cost that you're incurring on that particular loan is a humongous rise of 85%, and it is just not what a financially prudent person would do. And that is why my advice to you is, if you have seen that the rate being charged on your home loan has increased, which is but obvious after RBI increased the rates, please go and check your EMIs and ensure that your EMI also goes up proportionately. If it has not gone up, call up your banker, talk to him and tell him to charge you a higher amount, because by not doing so, the loss that you are having by increasing the tenure is much larger, and it is something which is you must completely avoid as a prudent financial person. If you have any more questions regarding this or anything surrounding the home buying purchase decision that you need to make, do check out our course Money and Makan, which is available at a special discount for you. The discount code is in the comments in the description below. And if you have any questions, please leave your comments below this video or write to us at iplan@wealthcafe.in, and we'll be happy to answer any questions that you may have.